months and months now, we've been talking about all-time highs in the market. But last night, the chair of the Federal Reserve, Jerome Powell, punctured that exuberance that's kept driving markets higher and higher. And the way he did that was to talk down the potential for further interest rate cuts in the US. Now, for Australian investors, this is an echo of what we're seeing this week in the Australian market, and that is after the inflation read on Wednesday, the certainty that so many investors held that there would be further interest rate cuts in Australia evaporated. And the same thing happened in the US last night. In interest rate markets, we saw traders back right away from the potential for a rate cut. They'd previously been pricing a 100% potential rate cut in the first week of December from the US Federal Reserve at its next meeting. That pricing is backed right off to about 70% at the moment. So on balance, traders are still reflecting a high potential for a cut, but the certainty that the market was treating with has gone. And that had an immediate impact on share trading. NASDAQ was down 1.5% overnight. There was pressure across the market. And the market map looks like a mirror image of the previous night. The previous night, most of the market was in the red, but the leading tech stocks were in the green. And that gains from those big tech stocks, because of their size and dominance of the US market, meant that the indices recorded gains despite the fact that most shares fell. Well, last night we saw the reverse, with modest support across the broader market, but a lot of pressure on those previously glamorous leading tech stocks. And that fall in those mega cap stocks meant that the indices all finished in the red. And it does look like we could see a similar reaction across the Asia Pacific region today. Now, that fall in the tech stocks came despite the fact we saw strong results from Apple and Amazon. Now, these results came out after market, so they didn't get a chance to be reflected during the day's session. And we have seen some strong gains in those stocks since they released those results in the aftermarket trading. So we might have a firmer footing for trading tonight in the US, but as it stands at the moment, weakness abounds. And the real concern was reflected by the fact we saw a sell-off in bonds. The US 10-year yield, which had touched 3.95%, sold off last night to about 4.1%. And gold rallied again. Now, this is unusual in a situation where we're expecting tighter monetary policy and higher interest rates, but the rally back probably reflected the fact that we'd seen prices smashed from that high at 4,400 just over a week ago to touch levels closer to 3,900. So the rally back over the 4,000 mark could well be a bit of reaction to that dramatic fall, but nonetheless, gold was up overnight. We've got a lot of events today that could shape market trading. In Australia, we'll see the PPI. Producer prices are, of course, a leading indicator for inflation. So if we get a strong read on those producer prices, we could see further fears about the potential for tighter interest rates and selling in the market, something to watch out for. On the other hand, around mid-session today, we'll see China PMIs. And those PMIs, of course, are very important to the Australian economy and the whole Asian economy. So we'll be looking for a read on growth out of China today. And heading into tonight, we will see the core PCE. Now, the PCE is part of the national accounts that are released each month and each quarter. That core PCE, the deflator, is a measure of price inflation, and in the past it's been a focus for the Fed. So that reading on PCE tonight will once again speak to inflation, and because of that, directly to the potential for interest rate cuts or not in the US. So the number of key releases over the course of this session and into the US session tonight. But looking at Amazon's result, it was in no uncertain terms spectacular. They beat their third quarter estimates. They had the fastest growth in Amazon Web Services, that's their cloud service, in years. They've also lifted guidance for this next quarter. The fourth quarter estimates are up, and they are now projecting revenue of more than $200 billion for the quarter, an extraordinary retail outfit. Post-market trading in the shares reflects this spectacular result. We've seen very strong gains. It's trading up more than 10%. At one stage was up 15% in aftermarket trading. So it's pretty clear investors are pleased with this result. The CEO, in comments after the result was released, said that it is AI driving growth, and AWS is up Amazon Web Services, that is up 20% year on year. Now, this is an important thematic because there's a lot of concerns amongst analysts that AI was going to hurt Amazon. Instead, according to the CEO, AI has been the key driver of growth and has accelerated growth at Amazon. They're aggregating and spending plans to build future capacity. They're clearly willing to invest in this, in the growth that they're seeing. And as I say, the market reaction suggests investors very pleased with the result from Amazon. So turning to our watch list today, we've got Atlassian. Now, Atlassian is the Australian-based software business that is listed in the US. It reported aftermarket, and once again, its shares have surged in response to that. In aftermarket trading, it's up 6%. They announced the appointment of a new AI chief. First quarter revenue was up 21% to $1.4 billion, and they're forecasting stronger growth for the next quarter. The analysts on the Moomoo platform have a strong buy on Atlassian, but it is down 34% year on year and currently trading at levels that are about 1/3 or below 1/3 of its peak pricing in 2021. There are concerns that AI will upend this software business, but on the evidence that we saw last night, that has not occurred so far. And with their clear commitment to investigating and expanding into AI, some fears might be evaporating, and that strong buy recommendation from analysts might be justified. Next on our watch list today is Coinbase, the crypto exchange. It fell 6% overnight, echoing the moves in Bitcoin, which was down to 107,000 US. Its report after market had it up by 3%, regaining around half of what it lost in the day session in the US. $2 billion in revenue. EPS was slightly better than expected. Coinbase, however, is up 28% year to date. The CEO's comments were a little disturbingly vague in that he expressed a desire for Coinbase to become the exchange of everything. That seems a little unfocused to me, but the overall reaction in the aftermarket trading suggests that things might not be as bad as those comments sound. And the last stock on our watch list today is Wesfarmers. It was smashed yesterday, down 7%. The reason for that was that shift in interest rate expectations and that higher than expected inflation. And that higher than expected inflation rate is a double whammy for Wesfarmers, because not only does it suggest that prices in many of their retail outlets will be pushed higher, making them less affordable, with interest rates likely to stay higher for longer, consumers also have less to spend. And that double whammy was one of the reasons why we saw them hit by 7% and why they're likely to be under pressure, along with the whole retail sector in trading again today. Retail has been strong, but investors are fearful of the future. So they're reporting good numbers, but it's not enough at the moment because the outlook is, well, to say the best, clouded. Wesfarmers currently has an underperform rating on the Moomoo platform. Stock is already up 21% year to date and has hit an all-time high in the last couple of months. So while the underlying businesses appear good at the moment, the outlook is clouded and the share price has been elevated. So there might be some digestion issues before trading in Wesfarmers shares over the coming days and weeks.